Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. General Atlantic invests in Ujala Cygnus. As part of the agreement, the VC will acquire a majority stake in the healthcare provider. The firm's early investors, Eight Roads Ventures, Somerset Indus Capital and Evolvence Capital, made a full exit.
NCLT gives a split verdict on investors' interim plea against Baiju's rights issue. A third judge is likely to be appointed by the NCLT for finalizing orders. The court is next set to hear the case tomorrow, that is the 4th of April.
Sift Hub, an AI platform for sales, raises $5.5 million in a seed round from Matrix Partners India and Bloom Ventures with participation from Neon Fund. The platform helps sales and pre-sales teams discover up-to-date information and generate accurate responses grounded in company knowledge.
Mave Health, a mental health tech startup, raises 6 crore rupees in a pre-seed funding round led by All In Capital and Utsav Somani's iSeed Fund. The firm will use this money to launch ARC, a non-invasive brain simulation wearable which treats depression.
Delhi High Court disposes a public interest litigation against the sharing of citizens' data collected by travel platforms Make My Trip, GoIbibo and Skyscanner. The PIL sought the intervention to ensure that foreign travel companies do not share user data like name, Aadhaar number, passport details during ticket bookings.
And Yahoo acquires Instagram co-founder's AI-driven news platform Artifact and will incorporate its technology across the US, web services providers News and other sites. Okay, so those are the headlines that we're tracking for you today from the startup world. Now, the Delhi High Court has dismissed a PIL against sharing citizens' data collected by travel platforms like Make My Trip, GoIbibo and Skyscanner as well. This plea has sought the intervention of the court to ensure that foreign travel companies do not share Indian users' data. Ashmit Kumar has been tracking that case for us and joins in to tell us what the court observed in the matter. Ashmit.
Well, a PIL had been filed before the Delhi High Court. The PIL essentially raised the concern that travel platforms are collecting sensitive personal information. So whether that's names, address, Aadhaar number, passport numbers, said that these travel platforms are collecting the data and then subsequently monetizing it, selling it, sharing it. The PIL specifically mentioned Make My Trip, GoIbibo and Skyscanner. Also raised the concern that all of three companies are either wholly or partially owned by Chinese entities and that is a cause of concern to the petitioner. Now, the Delhi High Court took note of these concerns today, but importantly raised the question as to why the petitioner came first to the Delhi High Court and has not made a representation, has not raised this concern before the relevant ministry. Now, on the back of that, the Delhi High Court, we understand, has passed a 3-part order. Number 1, no expression of no adjudication on the merits of the matter. The Delhi High Court has simply not gone into the merits of the case, whether there's any need for any orders to be passed with respect to either one of the 3 companies or for protecting the privacy rights. Number 1. Number 2, importantly, the petitioner in this case, Ashwani Kumar Upadhyay, has been given the liberty to make this representation, to raise these concerns before the relevant government authority, before the relevant ministry. And finally, number 3, there has been a direction passed from the Delhi High Court directing the centre to consider these concerns if the representation is filed and subsequently pass a reasoned order on this subject expeditiously. So that's the broad takeaway here today from the Delhi High Court. Back to you.
Thank you, Ashmit, for those details. Appreciate you joining us. Moving on, SaaS-based governance, risk and compliance platform Scrut Automation has raised $10 million in growth capital from existing investors Lightspeed, MassMutual Ventures and India Partners. The company will use the funding to enhance their platform capabilities and incorporate generative AI use cases to reduce the manual effort for risk and compliance teams. With this round, the company has now raised $20.5 million in total venture funding since its inception in 2021. To elaborate on the road ahead, joining me now is Scrut Automation's co-founder and CEO, Ayush Ghosh Chaudhary. Ayush, welcome to Startup Street. You help tech-first mid-market companies build, manage and maintain enterprise-grade risk and compliance programs. First, tell us, how are you doing this? Take us through your solutions and how are you eliminating the need for multiple legacy platforms and spreadsheets, especially in highly regulated industries, Ayush?
Well, thanks for the question and glad to be here. So Scrut essentially, as you mentioned rightly, is a governance, risk and compliance platform that acts as a system of record for all artifacts that a company has related to compliance and risk management. That could mean policies, evidence artifacts, vendor risk assessments, employee risk. And given that it acts as a system of record, all of this information is actually aggregated in one platform. Therefore, companies don't have to deal with multiple disparate sources of information. And Scrut also integrates with the sources of this information. So a lot of this information actually gets collected automatically. So there is no manual effort involved in people having to upload multiple files in drive folders or having to maintain multiple doc files.
All right. But Ayush, we are also seeing a rapidly evolving threat landscape, that's accelerated by the adoption of Gen AI, massive layoffs in cybersecurity teams, increasing skill gap in cybersecurity are some of the other challenges faced by companies today. You claim that Scrut Automation provides a third option for companies that seek to build scalable GRSE programs aligned with the organization's goals, risk, and resources. If you could explain the first two options and how is the third option more viable?
Well, traditionally, the way so GRC as a category has traditionally been a large enterprise play, but off late, as you rightly pointed out, small and mid-market companies also have been exposed to the kind of threats that traditionally large companies have been exposed to. And the problem with that is small and mid-market companies often, for them, the threats become existential. So GRC as a category, as a problem statement, has become very important for these companies. Now, legacy enterprise-grade tools don't typically work for mid-market companies because they need something which is quicker, more DIY, easy to deploy, doesn't need a 6-month-long implementation cycle, and that's where Scrut comes in and fills the gap. Now, in terms of the way Scrut gets implemented, it fills both the knowledge gap because the platform has multiple DIY capabilities. You can actually spin up a Scrut instance and get it live in less than 2 weeks. And it also integrates with multiple sources of information so that you don't have to manually keep track of your controls on a continuous basis in a point-in-time manner.
Okay, so Scrut Automation basically provides complete visibility into organizational risk. It reduces compliance workloads and simplifies audits as well. Ayush, again, if you could take us through your business growth numbers and the current reach.
Well, since inception, we've grown at more than 300% year on year. North America contributes about 40%. North America and Europe combined contribute about 40% of our total revenue right now. The outlook for the coming year also looks good. So despite a generally bearish environment for software sales, we've continued to accelerate quarter on quarter. Our margins look good. We've been very capital efficient, and we intend to continue that going forward.
All right, let's now talk about the fundraise. I believe the fresh funds will be used to bolster platform capabilities. You plan to integrate generative AI applications to streamline manual tasks for risk and compliance teams. If you could explain this and also elaborate on the new offerings in the pipeline, and if you could also share timelines.
Well, there are 3 core capabilities that we're actually doubling down on that also serve as differentiators for us. One is we like to think of ourselves as a risk-first compliance platform because we place a lot of emphasis on precipitating the company's risks first. And that's especially important for companies operating in regulated industries. So we're deepening our capabilities there. We're expanding the sources of integration and the extent to which we can automatically precipitate risks in the customer's environment. The second capability that we're investing very heavily on is collaboration because GRC, as we see it, is a team sport, especially for mid-market companies that operate smaller teams and lower budgets. So how do you very frictionlessly enable that collaboration between multiple teams? And that's something that we've managed to do well over the last some time, and we'll continue to go deeper into that. And you mentioned the Gen AI capabilities. Specifically, what we are trying to address through those capabilities, which we've been piloting for some time and they'll be out very soon in the next couple of quarters for commercial use, is to bridge the knowledge gap because oftentimes mid-market companies have smaller teams and they don't have the kind of in-house expertise that large enterprises would typically have. And they also don't have the budgets to hire expensive consultants. So to that extent, we are using Gen AI extensively to bridge that knowledge gap, make it very easy for people to understand best practices and make sure that policies are in order with the latest regulations.
All right. Ayush, you mentioned you're already present in the North American and European markets, and you're now looking to further expand in these markets. So talk to us about your global playbook and what is the kind of demand you're seeing in these markets.
Well, we started our North America go-to-market less than a year ago, and it's already scaled to, it contributes to about 40% of our revenue today. Demand continues to be strong. As a category, we've been relatively insulated from the bearish environment for software sales, and we've continued to accelerate quarter on quarter. So over the next 12 months, we expect our North America business to grow 4 times of what it is right now.
Okay.
And we do continue to see strong pull from India as well, given the general regulatory urgency, especially for financial services companies, in having to comply with multiple regulations.
Sure. Ayush, if you could also take me through your future revenue targets and what is the road to profitability looking like?
Well, as I said, I mean, we've grown 300% year on year, and we'll continue to continue the momentum, especially the North America business, which is expected to become 4x of what it is right now. In terms of profitability, so we've maintained very healthy gross margins. We've been very capital efficient. We've maintained top quartile capital efficiency. But we will continue to invest in our growth. We do not intend to be PAT positive in the next few quarters, but we'll maintain very healthy gross margins in Rule of 40.
All right. One final question, Ayush, and we've been discussing this, but given the increase in the number of breaches and attacks over the past few years, as well as increase in regulatory compliance requirements, mid-sized enterprises are now adopting strong governance, risk, and compliance practices. So clearly, there's a lot of potential for you to grow. But how do you plan to grab a bigger share of this market?
Well, the differentiating capabilities for us have been around risk management. And so we like to think of ourselves as a risk-first compliance platform. And the kind of companies that really value this proposition are mid-market companies operating in regulated industries like financial services, healthcare, and enterprise software across all geographies. And that will continue to be our focus. We will remain extremely focused on serving this group. This kind of companies contribute to more than 75% of our current revenue right now.
Okay.
So the capabilities that we mentioned that we're doubling down on are essentially helping us focus on this. We continue to face very strong inbound demand.
Okay.
More than 50% of our demand continues to be inbound. So.
All right, it's time for me to wrap up our conversation. But many thanks, Ayush, for joining us on Startup Street, and wish you the very best for all your aggressive growth plans.
Thanks for having me here.
Well, it's not just governance, risk, and compliance that AI is helping with, because it's that time of the year when employees across the board eagerly wait for their increments. But how do you stand out and ensure a juicy paycheck? Well, a new survey suggests AI skills could help you get that big pay that you've been eyeing. CNBC-TV18's Kanishka Sarkar shares insights from the report on how exactly to make the most of these AI tools.
For a year now, concerns about technologies such as ChatGPT or Google Bard displacing jobs have lingered. Nonetheless, discussions have progressed significantly, with both employers and employees seeking to harness AI's benefits. Now, according to a report on advancing AI skills by AWS and Access Partnership, not only younger generations like Gen Z, Millennials, and Gen X workers, but also baby boomers, typically considering retirement, are interested in participating in AI upskilling courses if available.
Workers we talked to mentioned that AI will make their work 66% more efficient. We also look at how learning opportunities are being provided because of the fact that they can use AI to learn better and become a lot more efficient in using certain solutions. And the third one is the fact that in a market which is very competitive and we have a massive supply gap, that's where the pay boost sort of comes into the picture.
There are 4 or 5 use cases which have sparked the imagination. So the first use case, we call it the 4 C's. The first use case is concision, where we're talking about text summarization, information retrieval, or the AI-powered assistant, as it were. The second use case is code generation, and code generation is how quickly can you generate error-free code and which will make you productive and which is bug-free and secure at the same time. Then there is customer experience management, which is really about how to enrich customer experience, get them the response that they want in the fastest possible way, as well as reduce the cost of customer service. And finally, there's content generation.
Indian workers anticipate that AI skills will positively influence their career trajectories, and employers are equally prioritizing the recruitment of AI skilled professionals. They aim to transition their companies into AI-driven enterprises by 2028, although obstacles persist. Not only is there scarcity of AI talent, but there's also limited time for upskilling. Additionally, technical debt arises due to data being dispersed extensively. And experts suggest that current educational systems fail to nurture the creativity required to effectively utilize AI tools. Thus, the pressing question arises: what steps should one take?
My first advice to the students is, listen, get the basics right. You cannot start learning AI/ML without understanding how to code right. The second then is learning a cloud skill, because The proliferation of AI was made possible because of the large data set processing capability that came from compute in the cloud. The third skill is very critical. Look at softer skills like creative, design thinking is one philosophy, creative thinking is another philosophy. Getting at least educated about what is responsible AI is going to be critical. Start looking at data science principles and data analytics principles. And finally, again, a softer skill, which is about a growth mindset, thinking about art of the possible and working across teams.
Once you have mastered these skills, Amit suggests considering roles such as AI engineer, data scientist, cloud architect, and prompt engineer as potential career options. And then, what's the increase in your take-home pay? According to AWS, individuals with AI skills could experience salary boosts of more than 54%. Meanwhile, a recent Glassdoor survey reveals that AI engineers in India with around 5 years of experience earn an average salary of approximately 24 lakh rupees. Moreover, upon upskilling, the average additional cash compensation is about 14 lakh rupees. And now you can do the math. In Delhi, Kanishka Sarkar.
Well, with that, it's time for us to head into a short break. But coming up, next 200 Indians in the Forbes list of billionaires, including 25 newcomers. Louis Vuitton's Bernard Arnault retains his position as the richest in the world. India's Mukesh Ambani, the only Asian in the top 10. More on that on the other side. Stay tuned.
Welcome back to Startup Street. Now, micro-lending platform iFinance has raised 15 million euros or about 137 crore rupees in debt funding. The company says this fresh infusion is going to help them strengthen their ability to provide financial support to underserved MSMEs across India. They'll also be used for on-lending to these businesses. To give us a sense of where the company is at with its active client base of 4.5 lakh micro enterprises and AUM over 4,000 crores, and what next is the company's MD and CEO, Sanjay Sharma. Sanjay, thanks very much for your time here on CNBC-TV18. Briefly tell us about this 137 crores that you raised. Of course, for a lender, it is normal course of business to raise debt to then on-lend it. But how exactly are you going to deploy this for your growth? Sanjay, you're on mute. If you could unmute yourself.
Thank you, and good evening to all of you. We raised a 15 million euro debt from an organization which is invest in visions. And there's a lot of consonance with them. iFinance, as you mentioned, provides working capital loans to very small and unorganized businesses right across India. And in doing so, it helps them transform themselves into more competent organizations. And Invest in Vision also wants to help create impact by providing working capital loans to small businesses. So there's a meeting of minds, and we raised 15 million euro at a very good rate. This will help us keep growing our book. I think we disburse almost close to 500 crores in a single month. So this money will very quickly get used. And this is part of our ongoing efforts to raise debt and equity when needed.
Okay, so, keeping that in mind, now you've crossed an AUM of 4,000 crores, as we understand, with these new funds and the kind of 500 crores of monthly disbursements you're talking about. Where do you see your AUM by the end of the year? What sort of growth rate are you anticipating?
Yes, I think we ended this financial year at a 4,400 crore AUM. And I think the next year we will continue to grow at a 50% growth rate. So we'll be closer to the 6,000 or 6,500 crore mark. And since we give small loans, this translates to a very large number of micro enterprises. We today have close to 450,000 micro enterprises that we have lent to. And I think next year this number will probably climb up to closer to 700,000.
But Sanjay, could you give us a sense of what your market share in this MSME lending market would be like currently?
See, in the micro enterprises, which are unorganized, I think our market share could be very large compared to the market lending, because there are very few companies that loan money to people without security of property, etc. So if you look at that, then we might be a dominant player already. But when you look at the percentage share against the total market that exists, then we may not have even crossed 1% of the market.
Sanjay, but lending without security is the whole idea behind the government's MSME lending schemes that have been announced in the last few years. But let me come back to iFinance. You said 500 crores last month and you've crossed 10,000 crores in loans now. What about the year ahead and the full year's revenue and profits that would translate to on the back of this growth?
Yeah. I think it's very important for finance companies to stay profitable. And I think we have been profitable for a period of time. This year also, we delivered a return on equity of almost 18%, which is quite a handsome return on equity for our investors. Next year, as we grow to, as I mentioned, 6,500 crores, we will have a revenue of almost close to 1,800 crores. And we plan to deliver a return on equity of closer to 20%. So I think that is in a sense, the top line numbers.
Okay, but your disbursements for the year, if you're doing 500 crore every month, are you looking at a 6,000 crore sort of a disbursement target for the year? More?
No, I think we will moderate it down. March is always a wonderful month for most financial companies, but we will, I think the next year we should be disbursing close to about 4,000 to 4,500 crores of fresh disbursements.
Okay, my bad. I was saying 3,000 crores, not 6,000, but yeah, 4,000 crores is the target. But, we have to ask you, we ask you this every time. You told us about your plans to take, the company public by FY26. I'm wondering with the kind of growth rate that you're speaking of, could those plans get advanced, or rather, if you could outline for us what the milestones you're looking to cross would be before you actually take the company public?
I think our plans getting advanced is unlikely.
Okay.
I think we're doing well. We have a good track record. Last 2 years or 3 years have been good. Very good numbers have come out from the business. We want to get into an IPO when we have at least 6,000 to 7,000 crore AUM, and with a return on equity of closer to 20%.
Okay.
And a profit of closer to 500 crores for that year when we do an IPO. So it has to be a substantial enough player in the market. Otherwise, the financial market can get very crowded with smaller players.
Well, you're not too far off from those targets that you outlined, but a quick word on your customers as well. You claim to have about 4.5 lakh active customers at the moment. What is the rate at which you're adding customers monthly, annually, and any trends that you're seeing, whether these customers are borrowing similar amounts, whether ticket sizes have increased, or, any major trends to outline?
See, we have, since inception, given loans to probably closer to 9 lakh customers, but we have active base of about 450,000 customers. And these customers are those small enterprises which could be in manufacturing, which could be in trading, service, so all the sectors. We find that a lot of times we are asked that, that is there a stress in the market? Are these unorganized enterprises doing fine? And we found that there is an active demand. We find that the typical gross NPA levels have been stable. We deliver very attractive gross NPA levels of below 3%. So I think we have not seen that change over the last 2 or 3 years since COVID. And I think, therefore, we believe that there is demand. The last year has been a most wonderful year, I would say. It's a magical year. And I think we hope to continue that magic into this year.
But I don't know if RBI is that excited about all of this, given that they've publicly expressed some concerns about overheating in the economy. How are you being mindful of that? How has your portfolio performed?
RBI is mindful of unsecured lending to like personal loans, etc. The lending that we do is to businesses. And I think these are businesses that have for a long time been starved of any finance. So it's natural that you'll see good growth here. But we have been careful, given RBI's orientation. We have taken extra care to make sure that no processes are compromised. And last year, we delivered almost a 50% growth, which for our scale is actually quite a moderated growth. Otherwise, we were growing at almost 70-80% earlier.
Okay. That's interesting to hear. But Sanjay, that's all the time we had, unfortunately, today. Always a pleasure speaking with you. Thank you very much for your time.
Good speaking to you. Thank you.
All right, moving on. There are now more billionaires in the world than there ever were. This is as per Forbes annual rich list. The world has 2,781 billionaires with a collective net worth of $14.2 trillion. That's $2 trillion more than 2023. Kiran Khatri is here with the highlights.
The top 5 names on the list remain largely consistent. LVMH CEO Bernard Arnault is the world's richest with a fortune of $233 billion. He's followed by Tesla CEO Elon Musk, Amazon founder Jeff Bezos, and Meta CEO Mark Zuckerberg. Women account for just over 13% of the world's billionaires. L'Oreal heiress Françoise Bettencourt-Meyers is the richest female billionaire, followed by Walmart founder's daughter Alice Walton. 200 Indians feature on the list, and their combined net worth is just $50 billion short of $1 trillion. Of these, 2 Indians feature among the top 20 richest. Reliance Industries chairman Mukesh Ambani with a net worth of $116 billion and Adani Group chairman Gautam Adani with $84 billion. Ambani is also the only Asian to have entered the $100 billion club. Other notable names include HCL Group Shiv Nadar and Jindal Group Savitri Jindal and family with a net worth of over $30 billion each. 25 Indians made a debut on the list, including Medanta's Naresh Trehan and Keynes Technologies' Ramesh Kunnikannan. Both their company stocks have had a good run since their listing in November 2022. Renuka Jagtiani, the CEO of Landmark Group, is also among the newcomers. AI is emerging as a big wealth driver for the billionaires on the Forbes list. NVIDIA CEO Jensen Huang features among the world's 20 richest people for the first time, given that the stock rose nearly 300% in the past year. Super Microcomputers co-founders and husband-wife duo Charles Liang and Sarah Lu have become billionaires as the stock is up more than tenfold in the past year. The company makes servers for generative AI apps. OpenAI's Sam Altman, the man behind ChatGPT, is also a newly minted billionaire. Last but not least, there's some news for Taylor Swift fans as well. The pop star has made it to the 3 Club thanks to the success of her Eras tour, which raked in $1 billion in revenue.
Well, Kiran, thanks very much for bringing us insights from that very interesting list. But because this is Startup Street, we're going to bring you some more insights because there are several startup founders that found their name on the list as well. Starting with Zerodha founders Nitin Kamath and Nikhil Kamath, who are the richest startup founders in India. Nitin Kamath has a net worth of $4.8 billion, while Nikhil Kamath has a net worth of $3.1 billion on that list. Radha Vembu and Shekhar Vembu are also mentioned on that list. Their wealth stems from their stake in Zoho Corporation. Radha Vembu has a net worth of $3.4 billion, while Shekhar Vembu has a net worth of $2.5 billion.
And that's not all. Founder of Nykaa, Falguni Nair, ranks 1,143 on the world's richest list with a net worth of $2.9 billion. Sanjeev Bikhchandani, the founder of InfoEdge, is another notable name from the startup world with a net worth of $2.6 billion. Founders of Flipkart's Binny Bansal and Sachin Bansal have a net worth of $1.4 billion and $1.2 billion respectively.
Okay, on that note, it's a wrap on this edition of Startup Street. Thanks for watching from Shruti and me, but stay with CNBC-TV18. More news and updates will continue on the other side.